history is made of movement, and those who move us are our clients. In 1995, we started our history in the segment of light vehicles with Original Autos. In 2007, we took another step with Transrios, Caminhões, and Ônibus, starting working with heavy vehicles. In 2021, we started consolidating the industry with strategic acquisitions that work with a new cycle of growth and development. In 2022, Automob was established. The idea was to integrate brands, expand our national coverage, and have our decisions customer centered with the objective of creating the largest dealership group in the country. In December 24, Simpar unified its operations of light and heavy vehicles in a single company, with Automob being the largest and most diversified dealership business in Brazil and the only company in the segment listed in B3. In the last 5 years, we grew more than 20-fold, organic and inorganically. Today, we have the most thorough portfolio in the country, with presence in several regions and representing the OEMs that account for 80% of new vehicle sales in Brazil. But our work goes well beyond sale. We provide a complete experience for armored vehicles to telematics, after sales services. We are always present to keep our customers moving in the used vehicle market, vehicles with a high potential of sale. We have the largest inventory in Brazil and also the largest used vehicles appraisal desk and also of auto financing in the country. The solutions make our negotiations more agile, transparent, and efficient. And this is only possible thanks to our employees that live the Automob culture and exceed our customers' expectations every day. Automob, mobility that transforms lives, connections that inspire trust. Hello, good afternoon. Welcome to Automob Day 2025. It's a pleasure to have all of you here. Thanks for coming. Also, I would like to greet those that are following us online. Thank you for being with us on the first Automob Day 2025. I'm Fabiana Panachão. I'm a journalist. I'm going to be with you together with Automob executives to present the strategic pillars for the coming years and also the structured plan that is going to drive profitability. This, as I said, is the first i- Investors' Day with the company. The company was listed in December 25, already as the largest and most diversified dealership business in Brazil. Before we start, it's important to give you some messages. I cannot fail to tell you that all the material that was prepared by Automob can include unaudited information and also forward-looking statements about future events and results. The results depend on market conditions and other factors and may materially differ from the expectations of the company. So that's the full disclaimer on our screen. So let's know our agenda for today for you to understand what we have for today. So we are going to start first with Sebastian Loos, Automob CEO. Then we are going to talk about the company's value drivers, and then each director is coming to stage to give you details of the strategic pillars of Automob. After that, Sebastian Loss will come back for the final remarks, and then we are going to open for your questions. Those that are here in person will have the opportunity to ask your questions on the mic, and the executives are going to answer them. If you are online, you can also send your questions. You are going to have a Q&A button on your screen, and we are also going to take the questions that come online. After this session, this Q&A, we are going to close with Fernando Antônio Simões, that is the chairman of the board of directors of Automob and the CEO of Simpar. So this is our agenda. We are going to have some hours together to really enjoy the relevant information on the first Automob Day. So without any further ado, I'm going to call to the stage Sebastian Loss, the company's CEO. He's Argentinian, lives in Brazil, has been here for more than 12 years, and has more than 25 years experience in retail. And today he is leading Automob. Please let's give a hand to Sebastian Loss. Good afternoon, everyone. Good afternoon, everyone. How are you? Before we start, I looked at the video. What a fantastic company we have. I've been with the company for 5 months, and each day I learn more, and I get always surprised by the size and magnitude of this organization. First of all, welcome everyone. Thanks very much for coming, analysts, investors, banks. We have members from OEMs, some guests, and also I would like to thank those that are online with us. I also want to thank the whole Automob team. I'm going to do that in the end, but anyway, thank so much for the fantastic work that we have. The new auto store, very beautiful. And we would like you to go and see the stores where everything happens. So if you have the opportunity, go and visit our stores. Anyway, let me try and change slides. Okay. So, what did we think about for this event today? We wanted to share our values, our culture, and to talk about our clients. And today, you are our clients. And as we always say in the company, we wanted to hear you. So we asked you, and I thank many of you for your insights. We didn't want to come here with a material that we thought would be important. We wanted to tell you what you wanted to hear. And out of these conversations, we came up with some questions. Some may sound basic, but in the presentation, we are going to talk more about that. The first is how the dealership business work. So we are going to explain in detail how we operate. Then, how does Automob generate value for our customers throughout their journeys? And we have several journeys. It's not just at the moment of the sale. And because Automob has a scale, it can create value to shareholders and also make the difference to our clients. But before we go into the answers, I would like to remind those who do not know our history how the Simpar Group thought of the Automob. You saw the timeline, and way back when the Simpar Group identified a huge opportunity for consolidation in the dealership market. You know the Brazilian market, it has relevant size, sales of 2.5 million new cars a year, more than 15 million used cars in the country. So this is a market that evolved in the 90s. We had five relevant OEMs in the country. Now we have more than 40 new entrants coming in. So huge evolution in terms of value proposition and a highly fragmented market. So the Simpar Group, and I thought it was brilliant, understood that there was no other player that could capture this value at this point in time. Uh, Automob is going to be the first one, and that has value. And we also have responsibility. We talk internally that knowing being the largest is not necessarily being the best. So we are constantly challenging ourselves, but there is value in being the first. And these are basically our differentiators. I'm going to highlight some our relevance in the places where we operate. We are the largest group, but strategically, we are concentrated in some regions. We have end-to-end services, and we are under an umbrella. That is, Automob is the only dealership company in Brazil that is listed with solid governance and with a level of compliance and ethics that is very high, and which we like to highlight because it's very important to us. Now, going back to the basic question, why have a dealership business? Because the dealership is a link between OEM and customers. You know, the OEMs, you have the Ferrari law that require exclusivity when you have a concession agreement. And with that, you can represent the brands of these OEMs with their products. We define commercial terms. We work on marketing campaigns, and the dealership guarantees to the OEMs that they are going to have a distribution channel. So it is very important for OEMs that their dealers meet their standards because we are representing their brands, but also can give coverage and reach for their products through their stores. And why do we have dealerships? Why dealerships? What is the value of dealerships to customers beyond the Ferrari law? Because we offer the full range of services, not only in Brazil, but in other places of the world. And the ones that can really stand out will have more profitability and will be more recognized by the customers. And we have, as I mentioned, very solid governance. We have a board of directors that is led by our chair, Fernando Simões. Our board members bring a combination of experience, entrepreneurship, expertise in technology, in retail, in customer services, in finance. So it is a combination of strengths for a better level of governance. We also have audit committees, financial committees, ethics committees, because we are a listed company. We have a back office structure to service the business with a high expertise. And what we highlight all the time is our managers' strengths. The group has almost 200 stores, approximately 300 managers, our mid-level leadership, with an average of 6.5 years on average in the company. And we highlight this because we believe this is an important differentiator. This is a sector with high turnover, and to have mid-level leadership that can translate our strategy to the front end um, in the retail business, to have, managers that are good at the front end enables us to have better results. It is a lot harder to reach good results without that. And our structure is also formed by our business leaders. And we have different leaders by pillar that have the autonomy to make decisions. And this is something that we truly believe in. That gives us agility, autonomy, that in turn enables us to have a better stand in negotiations, and negotiations with the OEMs, because we know the business happens between OEMs and dealers. If these people do not have the autonomy, the negotiation does not happen. So you're going to meet them today. It's a great team that makes things happen. And regardless of that, we do believe in agility and how we structure ourselves. Big numbers now. 197 stores as a whole, 12.6 billion gross revenue, more than 163,000 units sold. And perhaps one of our strengths that shows how the market believes in us is the amount of brands that we represent. Just as a reminder for those that are not too much acquainted with the business, for a brand to give you the concession, you have to meet a lot of requirements. So in addition to being the largest group in the country, you're also the most diversified. Business structure in light vehicles, which is the most relevant business. We have 137 stores, 31 brands. Here we have representatives of the different brands, and our value proposition is the most thorough that we have in the market today, which really gives us a difference in the market in terms of economic group. In addition, strategically, the group elected three areas to concentrate on. We are not spread throughout the country. We have stores in São Paulo, and Paraná and Maranhão. Trucks and buses, we are again leader in trucks, leaders with the Volkswagen Group. That makes us very proud. So Volkswagen is a very important brand in the industry. We have 19 stores, and we are exclusive with those OEMs. In agricultural equipment, 34 stores, two very well recognized brands. But we are going to give you more detail on that later on. And also mining and construction equipment for brands that really stand out in the market, and seven stores. To close my first presentation, I think that in a nutshell, we have diversification, scale in our business, and a portfolio that will enable us to capture unique opportunities. Sometimes OEMs have different momentums and they work with different strategies. All OEMs are very important to us. During the presentation, we are going to share with you macro trends, but diversification ensures resilience to our business. I think it is the competition that gave me the slide flipper. Anyway, we grew more than 20-fold, as you saw in the video, in the last 5 years. And the acquisitions, again, were picked and chosen very strategically. Good companies. Today we have AutoStar, and we also grew organically. In the last 12 months, our gross revenue of 12.6 billion has half of its growth organical. And it's important because those that do not know the group well think that our growth was only based on acquisitions. But it's very clear after the acquisitions, the group is able to improve the amount of sales per store in the acquired companies. In recent years, the group has made important investments in all our portfolio. 85% of our stores were either opened, renovated, or there was some kind of retrofit, or we changed location. Uh, we had basically 40 million reals invested in our infrastructure. The message here is that the store structure is ready to capture a value in the future. Our vision in terms of future capex for this portfolio in terms of value is going to be a lot lower. We are not going to have a relevant need for capex in the coming years. And in addition to this, in 2024, we sold 48 units per store. In 2025, we are at 53. That is an 11% growth per store. And again, this just reinforces the message that the company is under construction and it's not just growing by having more stores. Of course, when we grow stores, we can grow services, after sales, the most profitable part of our business, as you're going to see along the presentation today. We have higher working capital. We generate cash because our inventory has a higher turnover, and we have a dilution of fixed expenses and therefore better profitability. And just to illustrate what I just said, we have an exercise here uh, having our stores when they were opened or after they went through a structuring renovation. What do I mean by that? When with that store, we expand showroom facilities or when we remove service centers in the stores and have other areas of the city to provide the services. So what we do is that we maximize the value per square meters because dealerships sometimes are in very premium areas with a cost of lease that is very high. And body, paint services, repair services uh, can be centralized elsewhere, places where we have lower fixed costs. So anyway, the message here is that we are maturing our stores, and as the stores develop, our profitability increases. And this is an analysis that reinforces our message that we are still under construction and we haven't reached the full potential of profitability per store. And here the message is how are we structured? We have some support areas along the presentation. You're going to see in Emilio's part, we are in the process to integrate all our systems. So we are going to go from 11 ERPs or DMSs to one. Today we have of 26. I highlight this point, but I could highlight others. And if you do the math, if you go from 11 ERPs and more than 40 satellite systems, connectivity, interfaces had very, very high complexity. And now we are convinced that as of the first quarter of 26, that is when we complete the process, the possibility of ease of our platform will enable us to do the job with a lot more simplicity. And with that, it is going to be a lot easier to incorporate newer operations to the business. In addition, we are going to be able to digitalize and capture real synergies because today we have inefficiencies because of this amount of systems that we work with. To close this part of the presentation, I have some takeaway messages. We are again leaders in a highly fragmented sector. We have a very diverse portfolio that we believe is just right for us to capture the best opportunities. We have the brands we want in the geographies we want to be, and a high potential, as we saw before, because we are still maturing our stores, we have high potential to grow in each of the stores. And we are going to continue focusing on used vehicles. You're going to see that further on. We do believe in our projections. We have uh, this growth per store, which will enable us to offer more services, after sales services, which again, within our P&L, is what creates the most value. And also an opportunity when we finish the integration of our systems to capture even more synergies. So with that, I'm going to close and we are going to start a new block where our officers and directors are going to explain the driver of each of the opportunities. Thank you very much.
Great. So now let's go into the strategic pillars of the company. Let me invite Paulo Prado. He's been with the Simpa Group for over 8 years and it is the Investor Relations Officer. Welcome, Paulo. So I just want to first thank you. Um, I know a lot of investors knew the company before it was listed, so we are very glad to give you more information so you can understand the company better and our So I thank the presence of all of you here and also everyone that is online. Please be our guest to ask your questions. We will have a Q&A session at the end, and if we don't have time, us from Investor Relations will be available to answer these questions as soon as possible. We have two goals here. One is to explain the sector because we are the first listed company in the sector in Brazil. It's taking a little while to change the slides. And then the second goal is to explain a little bit more in detail how our ecosystem works. So we have 38 authorized brands, and our portfolio is very diversified. And this means two things. First, that we have a higher resilience when compared to other dealerships that are smaller and also work with fewer brands. So we have light vehicles, we have heavy vehicles, and then when we have everything in the same portfolio, we have a better position to maintain the balance in our company. And the second takeaway is the potential for growth. I will explain more of our trends, but the idea is that we have a capability of growing in a more sustainable way because we have brands that are capable of capturing growth. So if we're talking about electrified brands, we have brands that are in that sector. And so everything grows in a more sustainable way. We will see further on in the presentation when we look at the market. And then I wanted to highlight the Automob brands. Automob brands will talk to the client directly, and then we have 20 brands that we built. This portfolio was built throughout the past few years, and they represent the loyalty that we create with the customer. We have AutoStar that has been in the market for 33 years. And if you go into stores, if you visit today or any other day, you will see that there are people that work there for 20 to 30 years. And so they have a deep knowledge of this sector. And the same is true for other brands. We have representatives and employees that work with customer loyalty. And then finally, our products and services. We have a diversified portfolio, so our products will also, a client will have different opportunities and they don't have to leave the group. We have from luxury items to premium items, so we are able to tend to our client within our ecosystem. And so the client doesn't need to leave the store. We will find a good fit. We have our appraisal desk. So if they have a used car, we have the largest appraisal desk in Brazil. And so the customer will be able to offer a used car. And we also have the largest financing desk in the country. We have the after sales. We have title services. We have a trading opportunity. So again, the customer doesn't have to leave our ecosystem. And that gives us opportunities to raise our rentability because our products have higher margins. And so they can give more balanced results within our portfolio. And to show you the customer journey, I'm going to show you a video. Welcome to Automob, the largest and most diversified group in dealerships in Brazil. We represent 38 of the main OEMs in the world, and they are responsible for 80% of car sales in the country. This is a complete ecosystem that connects clients, customers, stores, and brands. It all starts in the OEMs. They make over 2.5 million vehicles per year in Brazil. We are responsible to make sure that these vehicles get to our customers, that will go through the entire customer journey with us, end-to-end journey, everything within the same ecosystem. We have solutions for every profile from cars, trucks, equipment, machinery, mining equipment that tends to city, fields, just how our clients want, our customers want, with technology and trustability. The experience may start with a used car. A client will trade in their used car and will have transparency throughout the journey. Our appraisals desk is the largest in the country. We have a specialized team that will appraise each car with a fair price, and they will forward that to one of our dealerships or one of our sales channels. Be a used or new car, we have the ideal car for our customer. For anyone that is looking for a new car, we offer a full portfolio representing 38 OEMs around the world. And if you want a used car, our inventory has 4,000 light vehicles, everything audited and approved. We have the largest financing desk in the country with over 20 financing institutions. This is to offer our customer a fast and safe journey with the best conditions in the market. Here, the customer will choose whether they want to go through in 100% online deal. It can be through WhatsApp or through the website, and they will talk to a consultant and they will do everything end to end online. So it's practical and technological. The new vehicle will reach the customer in a humanized procedure, fast procedure, and trustworthy. The customer will feel that we are side by side with them. And we keep on taking care of our customers. We have body and paint services, repair services, and we take care of each service digitally. Our NPS shows the trustability and the dedication that we give to our customers. Automob is done by our people and thinking of spaces that will welcome our customers. We have spaces for your pets to drink coffee. We have stores within our dealerships, everything so we can make this moment good for our customer. We look for a good customer experience and to make sure that our stores are updated according to the demands of the OEMs. Our ecosystem has everything in one place. Uh, Armoring, consortium, telemetry, and this makes sure that the client will make the best possible choice. Here, the customer can start with a used vehicle and they can go up to wherever they want without even leaving our ecosystem. We serve different profiles and we give specific resolutions for each one of them, explicit solutions for each one of them. We have app drivers, people with disabilities, and we find specific solutions for each one of them. Each customer is unique and each customer will have a specific journey. Automob, mobility that changes life, connections that inspire trust. An ecosystem that unify technology, people, and purpose. Automob, a company from the Simpar Group. Very nice. So let me just say something. We were thinking about how we were going to do this event, if we were going to talk about verticality or other ways to present, but we decided to give you how we think of the company. So we have new and light vehicles, we have F&I, we have after sales, heavy vehicles after sales, and our capital structure. So we will bring up our executives to talk about this structure. Even though we have our structure focused on the brands, I think that the executives have a view over the years that will be good for you to have a more in-depth analysis. Let me give the word back to Fabiana, and then our executives will explain our leverages, and at the end, we will show you the consolidated numbers so that you can see this puzzle all put together. So thank you, and we'll see you in the Q&A. Thank you, Paolo. So let's move on. We are going to talk about new and used vehicle sales. And now I'm going to ask Alessandro Soldi, that's been in the retail automotive sector, and he takes care of 18 brands at Automob. He is the premium CEO brands.
Good afternoon, everyone. Can you hear me well? Well, first of all, I'd like to thank you all for coming and to say it's easier to sell cars and talk to customers than come here on stage. But I'll try to share with you this segment of new and used cars, which are an important value driver to us. So I will start introducing new vehicles in the group today. This area represents, just give me a second to try and flip the slides. There you go. So the light vehicles value drivers represent 49% of the revenues with 30.5% of gross profit. We have had sustainable growth, as we've seen in the previous presentations, and in the last quarter of 25, we have 50,000 units sold. This is a very fragmented market, as was mentioned before, but it's not very professional. 80% of all dealers that are in Brazil are controlled by very small groups. So, what I mean is that only 20% is in the hands of groups with a more well-defined capital structure, which shows also an opportunity for making the segment a bit more professional. So, when we talk about the market, and we can see that since COVID, the market has grown relatively um, uh, slowly, 5.5%. We've already had fantastic times. We had, financing in 48, in 84 installments. We had more affordable cars being sold this way. But the market now is a bit more stable. And now we can grow above market because of our differentiators. And Automob shows that and has been showing that in recent years and quarters. We are gaining market share in Brazil. Today, we have 2.6% of the new vehicles of the Brazilian market. So, talking about macro trends, I'd like to talk to you about how much the group focuses on market trends in the Brazilian market. First, new entrants, the Chinese. The Chinese cars are very fashionable now. You drive the streets and you see Chinese cars everywhere. This is very recent. We didn't have this a while before. but new entrants saw an opportunity to grow in Brazil. And we, in Automob, because we have a very well-defined capital structure, reach, and a professional management, we were chosen by several Chinese brands. And today we are representing the main Chinese brands in Brazil. Further on, I'm going to show our share in this important segment. Then we have electrification, which is a trend. When we talk about electrification, I'm not talking only about electrical cars, EVs, but also hybrid cars, which are reality in Brazil, because we understand that for us to get to a scalable use of EVs, we have to go through hybrid cars. And we are also pioneers in hybrid and electrical cars. Volvo, as you knew, it had a full portfolio of electrical cars, and AutoStar already represented Volvo. So we do have the experience. And for us, perhaps it's even easier because the secret of electrical cars is to know the car and after sales services. It's not just everywhere that you find the services. So we have specialized technicians to really work with these cars with know-how. Direct sales, we saw that on the video. It is a market trend. The several channels that were created for sales. So, entrepreneurs, taxi drivers, rural producers, people with disability. So, in the group, we always saw the segment as an independent segment. So, we have a dedicated structure. People that is devoted to the segment. It's different from retail sales. And this is an important channel to us, and the domestic market is showing that 50% of the market goes through those direct channels, direct sales channels. So it's very important for us to strengthen our services there. Then services, the world today is very equal. Today, if you go out to buy a car, you have more than 40 brands to pick and choose, and customers will choose based on price and specific needs. And then they are going to choose a brand or the other. And when they make their choice, they will have the brand in different dealers that represent the same brand. So, what is the difference? The difference is services, is customer focus. This is how you add value, and this is how you have customer loyalty. Why come to the store, auto stores, if there are other dealers that sell armored vehicles? Because of services, because of courtesy, because of the expanded services that we offer. So, services, I believe, is extremely important because it is through services that we are going to set apart the competition. And digitalization and CRM, which are no less important. Buying a car is a bureaucratic process. There's lots of red tape. We want to make it easier. We want to eliminate the pain points. So the dealer is really important in the selling process. Without the dealer, OEMs cannot sell. Well, we do have the Ferrari law. They can't, in Brazil, by law, sell directly to the customer, but they have to have a dealer that is going to appraise the customer's used car, that is going to accept trade-ins, that are going to finance the sale. Today, most of the cars are financed in Brazil. Last year, 68.7% of all our Volkswagen vehicles sold were financed. There was some kind of financing, and that shows the importance of having a well-defined structure for you to be able to provide the best services to your customer. And CRM, we have been working, and Sebastian did mention that a while before. We are unifying the operating systems of our stores, and that will enable us to have an easier customer journey, uh, to provide better training to our sales force. And then when you have a brand that perhaps is not having a good performance, we can perhaps direct sales people from one store to the others. So with optimization, if you have a single operating system, it makes a huge difference. So digitalization, CRM, is a very important part of our business, and we are working very hard with that thanks to heavy investments, but we are just about to reap the fruit. We are just about to unify all the systems of Automob until the first quarter of 26, light vehicles. Very well, then. So now I'm going to talk about the diversity of our portfolio. You can take a look at the slide. We have several brands. It's 31 brands. And here you have the share in terms of revenue inside Automob. It's important to highlight that for some brands, we have relevant share inside Automob, but also an important share in the whole of Brazil. We are place in sales with Volkswagen, as well as BMW, and recently with GWM, a Chinese brand that we have. And the slide is not showing, but I will not fail to give you the information. With Honda this year, we also hit the first place in Brazil in terms of sales volumes. And this is for the OEMs, something that sets us apart because we are representing the brand and we are performing better than anyone else. So this is recognition that opens doors to other OEMs see us as an important player to improve their market share and customer services. Now I'm going to talk a bit about the presence of new entrants in the market. But before, I would like to make an analogy of the market and Automob. So I want to show you a bit of the market. It's a breakdown of market in terms of segments. So we have the 2.5 million cars. 65% are what we call the volume brands. We call them premium, but here we understand as volume brands. Fiat, Renault, Chevrolet, they are what we call volume brands. The Chinese brands account for 9% of the market. You're going to see on the next slide that they represented much less before. Luxury, 2%, Honda and Toyota 12, and other Japanese brands 12%. So Japanese brands account for 24% if you put together Honda, Toyota, and other Japanese brands. So a relevant share. And then here, the same market segment inside Automob. We can see that we have a very interesting market share. Luxury in the domestic market is 2%. At Automob, it's 13%. Chinese brands, 13% as well compared to the market. So that shows that we are a bit more balanced and therefore a bit more resilient.
Let me show you. I, this in this slide, the Chinese effect in Brazil. In the first quarter of 23, it's not so long ago. 1.2% of market share. And us from Automob, we were at the beginning. We were one of the first to represent GWM here in Brazil and BYD in Brazil. And so you can see quarter by quarter how we've been growing in a sustainable manner. And today the market is an 8.9, but in the past 9 months it was 10% in the market. So where are we going here? I think this is a hard question for me to answer, but So let me just wrap up this slide showing you our value drivers. You saw the importance of these vehicles in Automob. It's almost 46% of our revenue. And this graph shows the consistency that we've been working to go above the market average. So we have a 3.5 percentage points growth above the market. So bringing everything that I just talked about together, thinking of our diversified portfolio, the focus on the customer, our people, this is something that all segments have a hard time dealing with, and we do too. But I want to make sure that from our salespeople, from our repair people, they want to be in the winning team. So if they choose to work with us at AutoStart, they are coming because they know the structure of our group, they know the management, they know our portfolio. And what do they want to do? They want to sell more. Sales personnel want to sell. They get a bonus by sales. So they also want to believe in the company and they want to come work with us. And then, obviously, our scale, which is a consequence of everything that is growing above the market. So are all drivers that generate growth and value to our company. This is part of our strategy and where we focus our improvements. Now, this is me again. And now I'm going to talk about another driver that is on the used vehicles. So first, I want to show you how much they represent in Automob. So used vehicles is 22% and a 13.2 gross revenue. We've sold 32,000 used light vehicles in the past 12 months. So it's a 0.7 used to new vehicles ratio. So this is something that we look at every day. And we are pursuing every day the ratio of used to new vehicles. So in the point of sales at Automob, we are already working at 0.7. And then you can ask me, is this good or bad? Well, the market is at 0.3 ratio. And we are already at 0.7. And where is the market going? Where is the ratio going to go? 0.91. Well, I can only tell you that the used vehicles market is a lot bigger than the new vehicles market. We are talking about billion of cars that are sold as used cars in Brazil. So we are seeing a linear growth in that area. Out of these 32,000, I want to take a while to explain to you what is wholesale and what is showroom. The idea is to find the right price of the car, whether the car has a standard quality. So there are a lot of indicators that we look for to make sure we can resell that car. Those cars that are not up to standard, then we go to wholesale. We have a lot of brands. So why do we call wholesale and showroom? Why we are investing in wholesale? It's because of this. We can buy at Automob a car of 10,000 reais. We can even buy a car that the motor is not working anymore. And we can also purchase a car of over 200,000 reais. So this makes sure that we are delivering what the customer wants. And I think that this is maybe the most important differential of Automob compared to the market, the idea of the wholesale. We are never going to tell a customer no, unless there is a problem with documents or something like that, because then we are not even going to resell the car. But other than that, any car can be dealt with at Automob, be for a used car or a new car. So I think that this is something that is important. So why work on used cars? I already answered this a little bit, but again, it's a much larger segment. It's 6 times larger segment in Brazil. We can grow without the demands of the OEMs. So a standard point of sale that will offer used vehicles, but at the same time, we can open another store that is focused on used cars. We can open our own store and not rely on the OEM. So this is something that is an opportunity to grow. And also, used cars have a higher rentability. And why? Because they rely on credit lines and offer more services that you can offer the client, the customer. So let me show you our financing desk and our opportunities. We believe that by September 25, our appraisal desk appraised 107,000 cars. So how can I see opportunity in this? This is the white space here. Show us our opportunity. If we are able to buy more cars from our customers, then we can sell more new cars and we are capturing our customers' used cars. And so we can um, have a larger inventory or we can have, so this is an opportunity.
And perhaps this is how we can enhance the kind of services that we provide. Very well, then. It's interesting here because we did talk about dealerships being all the same, but the difference is in services, we said. And there is another difference that is very important, and that will lead to customer loyalty and customer choices. When we have a portfolio this size, I might have a product in my store that is 10,000 reais. It can be the first vehicle that a customer is buying. A used car, a motorcycle in a showroom that has a standard of quality that is certified and that can provide services to this customer throughout their life. If they get a better socioeconomic condition, if they have a greater need, we will always have products to offer to them. Today, people are changing how they choose products. Today, they are choosing products based on prices. Today, I have 200,000. Okay, so what can I buy with 200,000? And then you're going to check what kind of cars you have around 200,000. So, having this possibility of offering the customers so many possibilities increases customer loyalty, therefore, sales per store, therefore, we have a higher scale of sales. So, this availability that we are offering is very important. And we always have the right product in the right place based on the market characteristics. Here, used vehicles, my last slide, we we're talking about what is the limit of that point 0.7. We are very happy to say that we have 11% of our stores operating above the one-to-one ratio, which is again very important because we are increasing sales per store without having to spend more, expanding, hiring more people. We can dilute fixed costs where we have a better ratio. So today, within the group, 11% of our stores are performing above the one-to-one ratio. And I believe this value driver can certainly contribute for Automob to continue growing, creating value, uh, adding value to customers and shareholders. I'm sure that used cars can be an alternative that's going to be resilient in this market. I think that's it. I'd like to thank you so much. It was a pleasure to be here. And thank you. Uh, 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 Here, where we are, is a place that I feel good because it is where we make customers' dream come true. This is where it all happens. When we decided to have our presentation here in AutoStore, that was the idea. It could be AutoStore or any other dealer shop. This is where we win or lose, but this is where we feel good, and this is our day to day. Thank you very much and have a wonderful afternoon. Thanks, Soji, for the information. Now we are going to have Ricardo Ribeiro to the floor. 32 years experience in the automotive sector, more than 10 in the US. He started his career in 1993 when F&I, which is financing and insurance, started to gain momentum in the market. So, Honda Director Ricardo Ribeiro, you're most welcome. Thank you, Fabiana. Good afternoon, everyone. I am Ricardo Ribeiro, as she said. Just out of curiosity, I did start in 93 with F&I in a Fiat dealer in Santo Amaro. It was a large block, almost the whole block. Even the street at the back was called Pais de Barros. And the dealership was sold, closed, they sold the property. 30 years later, I come back, and this is exactly where Simpar's building was built. So I came back to the same address. So I'm going to talk about F&I, financing and insurance. And we talk about insurance, it's not just car insurance that we are talking about. We have extended warranty, tire insurance, financial protection insurance that we sell together with lots of financing plans, life insurance, and F&I accounts for 1.5% of our gross revenue today, but almost 10% of the company's gross profit, because here we are talking about services. So in the last 12 months, we had revenues of 184 million with gross profit of almost 170 million. And we break down these numbers and you see where it comes from. Financing accounts for almost half of our revenue. And basically, that includes a desk. We have a financing desk. As we have a car appraisal desk, we have a desk to approve financing. It's a large desk. I'm going to have a slide specifically about this desk. We work with more than 20 banks. And basically, what we do is that we make financing feasible, the best financing to the customer. And we have the speed to see what best fits the customers. Then, title services. If you buy a car, then you have to register it. If you buy a used car, you have to transfer ownership. And depending on the day, we can register a car on the same day, which is, again, something that is easy to the customer. It's fast for us. If you buy a car, you want to go home, you want to take it home. It's your dream. So today we do have the capacity of issuing documents on the same day. And that because of the specialized team that we have. Then insurance, you have it all. Car insurance, as I said, You have 3-year warranties for used vehicles. That's exclusive in the market. No one else has that. We have tire insurance. And fortunately, the streets we drive, demand this kind of services. If you tear your tire, you come to the stores, we change the tires, which generates current revenues. So you buy a car, you finance the car. If you have a medical emergency, we have an insurance that the bank will cover the installments. Armoring, which is also a reality in Brazil, we have our own teams, we have our own brand, and armoring is something that is growing. And then group pool purchases. It is small in terms of share in the market, but that generates recurring revenues. It's only 3% of revenues, but you join a group pool for you to get a car, to buy a car, a motorcycle, a tractor. So again, recurring revenue to us, and it is a very nice business. In the last 2 years, we doubled size in F&I in all the areas I mentioned. Again, insurance, title services, armoring, and group purchase plans. And why we doubled size? First, because we have a business model that's very much inspired in the American model, which is something that we have been working with for some time now. I had the opportunity of working for 10 years in the largest dealership group in the US, so I could contribute to that. And our major difference is our field team. We are close to the customers, we understand their needs, and we bring the products they want. So that's why we grew in insurance, title services, armoring, and group purchase plans. And we have an area dedicated to each one of these polls. Okay. Now, financing. As I mentioned, the largest financing desk in Brazil. You saw the video. And this desk, in addition to uh, make financing possible, because this is what we have to do. Sometimes you have a customer with a more restricted credit. It's his first used car, or maybe it's a large fleet. A fleet owner wants to buy a fleet with armoring services and everything. So that's a very specific need. Or it is the agricultural business that trucks have to make the business run. So this desk is also growing in size, and you see with new used vehicles and direct sales. It was the case today of direct sales, and that the financing desk found a different solution with a bank that would also finance armoring services. And profitability. This is something that we are growing both with new and used vehicles. So they did talk about the importance of used vehicles to us and how much the business can grow. Today, we have zero point 0.7 used to each new sold, and where we can get. Used vehicles are growing in profitability, and this is very important. Then gross profit per unit sold for each new car we sell. We were uh, at 1,300 and now we are at 2,400. We don't know where we are going to get, but we have a huge room to growth. So the largest finance desk in the country, more than 2 billion in the year, almost 2.5 billion, 22 banks are already connected to our platform. So the electronic platform, you come to the store, you fill in a form, you can even fill in a form online. Then we go to a platform that seeks the best solution for you. Centralization really makes credit easier, makes it easier for us to talk to banks. It generates agility and to us and to the customer. As a value driver, This is very similar to what Soji showed to you in the performance of used cars per store. 16% of our stores perform above 4,000 reais per car. Then we have 21% from 2.5 to 4, then 20% 1.5 to 2, and the rest up to 1.5. We don't know where we are going to get, but we already have stores performing here. Of course, it depends on the type of products, location, but what we have been doing is taking the best practices of the best performer stores to the others so that we can make our pie more robust. And products that bring loyalty and recurring revenues. 3 years warranty. We sell even used cars with 3-year warranty. Auto insurance within financing. We sell it all. You buy the car and you have financing, title, services in one package. Purchasing groups, we can have real estate, travels, services, everything that we are under this model of group purchases. Um, Tire insurance for 1 or 2 years. Tire insurance is really growing and becoming very popular nowadays. We have even insurance for car keys. Car keys are not cheap. So when you lose, your car keys, it is a problem. So we do have insurance. Items that are stolen in valet parkings. So there are so many products that we are offering to our customers and that we see can grow a lot in the future. So this is just a short summary of F&I, and now I'm going to turn to Heitor. Thanks, Ricardo, for the information. Now I'm going to invite to floor Heitor Alves, 13 years experience in the automotive industry. He started his work as a trainee in body and paint shop, and today he is the sales director for Toyota and Lexus. Let's have a hand to Mr. Alves.
Good afternoon, everybody. First, I want to thank for the opportunity to be here talking to you, a highly qualified audience. And so the idea today is to talk to you a little bit and explain what is after sales. And I may even surprise some of you on how much of a driver this can represent in the segment. And maybe the one with most potential. And you will see how maturing this business will bring opportunities further on. So first, I want to highlight that we represent about 8.7 of the revenue today, but we deliver more than 22% from LP. And so we are commercializing parts and services for our customers. So let's say they buy the car, what now? Now they have to live with that car, so they will need repair. So what will happen? They will come back to our ecosystem that we showed in the beginning, our investments and repairs for our stores, so we can really bring the client to our ecosystem. In the past 12 months, we already got 360,000 customers going through our stores. It's a lot of people, a lot of people. And we can get to even more. 1.2 billion in gross revenue. So an average ticket of 3,000 reais per customer. So let me show you the dynamic. So this is the evolution in revenue in the past years. When we raise the mix of products, we have more services and we see the impact in our gross margin. You can see that in the graphic. And I will explain this. Oh, the clicker is working for me, just saying. So our customer purchases a car. They start the journey. And then, let's say 2 to 3 years after they purchase that vehicle, they will buy another one. and that will go into our used cars. But the car still exists, right? The car is still getting older, let's say. So let's look at 10 years. The fleet in Brazil is very large, and all these cars need repair and assistance. Otherwise, they will stop working. This is something that they need. We offer 118 repair shops within all our dealerships. And these repair shops, what is the main customer that we get there? Customers that are within the warranty time, because there is a limit to dealerships to offer after sales services, and it's more expensive. And the OEMs know this. They recognize this and that this is the culture, and they are trying to find out other ways, for example, um, repair packages so that the customers can come back and have at a lower cost. So preventing will be best. So we get the customer to stay in our dealerships. But the customer can also have insurances. Uh, we sell insurance to the customer, and then if something happens, we have our body and paint services. So let's say they get into an accident or something like that, the average ticket for revenue for that is very high. So there's an opportunity to mature this business and bring in more revenue. But there's a part of these customers that we are still trying to evolve. These customers that are in independent markets, let's say they buy a second car, a used car. Oh, I'm not going to go into dealerships because it's too expensive. I'm going to find another center. OEMs know this, and so they are trying to create new brands. For example, T-Sense from Toyota, they are creating parts that will be lower cost and will be competitor in the market. So in this way, we can bring these customers to us and work with better margins. If we diversify the way we work with our services, we will have a more diversified margin and revenue for the future. So what's the secret of this? And how does this relationship journey with the customer works? Look at the colors because I think it's important. In blue, it's the lead. Like, we saw something on Instagram, on WhatsApp, or something. We see the customer wanting to make a purchase. So we start the relationship with them up until they actually do the purchase. So we have research, interviews, and then the two orange lines is the amount of effort that we try to do to keep up the relationship with this customer. So we have welcome campaigns to talk about the amount of mileage they have in the car, our offers and promotions. We say happy birthday on their birthdays. And so we are trying to keep in this journey. And this is a great challenge. We want to bring this journey into a more digital interface. So we are optimizing this business and this relationship, and we are closer to our customer. And what's the secret here? Client retention, making sure that this customer stays in the dealership. The, the more customers that we retain, the best. So if customers that are used to just coming in during the warranty time, if we are able to show them that we can offer um, good value and low cost because they already know that we offer great services, a good quality. Our team is specialized, but then we have to show them our mix of services, and we are putting in the effort to make sure that it makes sense to the customer for them to stay in our dealerships. And this is why our margins and our revenue are growing. Now, a myth, and I want to talk to you about different perspectives on this segment. There is a myth saying that electric cars don't need repairs. Oh no, they are going to need an electricist to do something. No, that's not it. These cars also need simple repairs. The only thing that they don't have is a cooling system for oil. Other than that, they have the same things as other cars. They have air conditioning, they have suspension systems. Sometimes they even spend more in tires because of the traction of electric cars. So there's a lot of services that you can offer electric vehicles. The repairs on dealerships usually focus on the warranty time. And what are Chinese brands trying to do? They are trying to increase the warranty time. So they're offering 5 to 8 years warranty for their customers. Together with that, Soji already mentioned, we need a specialized technical team. And to understand this technology is important within dealerships. And so what's the result? Electrified and electric vehicles are giving us a way to have higher retention with our customers. And so we will be able in mid to long term improve our revenue and have more retention of our customers in our ecosystem. Now, let me give you some data. We look at dealerships with through the indicator of productivity. So how much we are billing in services per employee. So how many employees do I need to have in our dealership to have X amount of revenue? So let's say we are working with 25,000 reais per employee. We have hybrid and electric brands that is working with 21,000, 26,000, and traditional brands 21.1 thousand. So I'm giving you two examples. GWM Guarulhos, 28,000 productivity per employee, and BYD in São José dos Campos, 28.8 thousand. So we are we trust that electrifying our fleet will make for a higher client retention in the next years. Now let me give you a benchmark. The company that Ricardo worked at has a 14% of after sales. It represents from their revenue 14% in after sales, but it represents 46% of gross profit. And in the US, this is a more mature business. Customers already know that they can deal with the dealership end to end. And so we look at 43% margin in benchmark. There are a few stores that are already working with that, are working at a 43% margin. So this is a path that we see as a possibility. Now let me show you. Now the clicker didn't work. It was working up until now. Now let me show you the driver in stores. So 28% of our store work at 43% margins. And then we have other stores that work with less than that. The stores that work at 43% margins with parts and services, they also have over 25,000 productivity per employee. They work with a more mature fleet, so to make sure they are tending to all customers, um, customers that are there for 5, 7 years. We have has more than 500 customers coming um, to the stores, visits per store per month. So there's a higher demand. So they need that. So I have two examples, Honda Santander and Volkswagen Tatuapé. They work with these margins. Now, what are my takeaway messages? If we digitalize our CRM, bring specialized teams to talk to our customers so that we can have a higher retention rate, this will help with our growth. Diversifying our services and maturing our services will also help improve our revenue and our average tickets and high margins centers. Diversifying products and services that will also help. And so we are already doing this, but if we work with our used cars more and more with our customers, having the customers never leaving our journey, the tendency will be that we are going to improve our results even more. So I'm very excited with after sales and how after sales can help drive value. Thank you very much.
Thank you very much for your information. Now we're moving on to Christian Han, that has 20 years experience in heavy vehicles dealerships and 8 years in Simpar Group. And he's going to talk about the consistency of the truck and bus segment, the opportunities of mining and construction equipment, and how they are going to resume the agricultural equipment business. So, with you, Christian Han. Welcome, Christian. Thanks, Fabiana. Good afternoon, everyone. Well, light vehicles are more famous, but now I'm going to have an opportunity to talk about heavy vehicles, which we consider within the company trucks, buses, machinery, and agricultural equipment. Within Automob, that represents 21% of revenues and also 20% of the company's profitability. More than 1,300 employees on the day-to-day, and we sold in the last 12 months more than 9,000 units. The greatest business in the heavy vehicle area are trucks. We work with Transrio, that was our first dealership back in 2007, and Tietê, that was recently acquired. Together, they account for 64% of revenues. Then we have our agricultural equipment business, Agromob, that represents Valtra and Fendit with 25% of revenues. And finally, MacMob with 11% share when you're talking about construction and mining equipment with Komatsu. I'm going to talk about that further on. 60 stores all over Brazil, and we can say that we are the largest group of truck dealerships in Brazil and also of agricultural equipment. Talking a bit more about the truck business, which is a very important business within the heavy business, more than 7,000 units. Growth in terms of numbers in the last 2 years. And we also grew in a time that the market is not growing. The market went down in 25, and we were able to grow volume with higher market share. Our Volkswagen brand is market leader. It has been a leader in the truck segment for 20 years with 25% market share. In the regions where we operate, we have about 29% market share, which makes our volumes even higher. Profitability is quite stable in the business. There is a discrepancy in the year of 23 because the market went down. That was when we changed trucks from Euro 5 to Euro 6. OEMs took some time to manufacture the new trucks. There was a less supply, then there was growth, and this year, very much because of the extra heavy market, the markets had a small drop. Talking about this market, it's also segmented. We have these light trucks. Volkswagen has from light to super heavy trucks, and we are able to diversify our business. 33% of revenues of smaller trucks, urban buses, then 40% what we call heavy trucks, and 20% of the extra heavy trucks. And we have an opportunity. OEMs have been investing in the business, and today, of new registrations, they represent almost 20%. Work that we have been doing, we started some time ago, but I'm giving a reference of 5 years ago, which is the diversification of the segment. We were highly dependent on selling trucks. But we thought of everything that customers can buy: tires, parts, services, other revenues, as we are doing very well with F&I, group purchases. We increased our bus business, used vehicles. We are also growing the segment, which brought more resilient and better operating margin for the truck business. We have a very modern structure, well-prepared stores to provide services to customers. Recently, this year, we opened beautiful units. Guarulhos, the largest Volkswagen store that was just opened in the middle of the year, and Osasco, also a very nice store, opened the second half of this year. And here we have a store in Eldorado do Sul, a metropolitan region of Porto Alegre. And we also opened the new PSR, which is a quick service store, just certified by Volkswagen, keeping the same quality of services, but located in smaller areas. And all those investments basically focused on customer services. In 23, we went from 262 service base to 365, more than 100 base that were increased to enable our customers to work better. Because customers want to use their trucks, they need their trucks to work, so we have to have high availability of parts. Some of our repair shops work 24 by 7, so they can bring their trucks at 6 p.m., they work all day long, but at 8 a.m. in the morning, they are going to get their truck. They don't waste time, which is a huge difference. Tractors of Volkswagen, everything with telematics, telemetry, we can schedule services, and that has made huge difference. In addition to this mobile shops in Tocantins, for instance, we have distances that are very long apart, one store from the other. So we go to the customer. And we also have AI in our shops. Today, our mechanics can already survey technical material with AI, which has helped them to find solutions to the trucks. So I think that we have been evolving constantly and consistently. We have a very nice market share, a healthy operating margin. We have diversified revenues. We are prepared for growth, focusing on services. The second business of heavy machinery is what we call agricultural, mining, and construction equipment, 9% revenue of the group. And as I said in the beginning, we have Agromob with Valtra and Fendt, and Makimobi with Komatsu. Talking specifically about agricultural equipment, Agromob, we have the full portfolio of products. Here we have Valtra. They have tractors that have 50 horsepowers, and Fendit can go up to 500 horsepowers. They practically do not compete with each other. You have one product close to 200 HPs that both brands have, but I can say they are basically complementary products. The difference is that Fendit products have a much higher value added, much higher price, and Valtra lower prices. We show tractors here. For 90% are Valtra that we sell. Only 9% are Fendit. But in terms of revenue, it's very similar. It's half and half because Fendit's average price is way higher. And Valtra is almost like the retail business. In addition to tractors, which is our main product, we have planters, harvesters, sprayers that are products that complement the agricultural business. I've also take the opportunity to show you this business has high seasonality, both of crops and products. The only product that is sold all day long is tractors because they have activity all day long. The others are sold seasonally. For example, the year starts for agriculture in September when you have the first crop. So you have to prepare the soil. Now my clicker is not working. So as I mentioned, the first crop is planted in September, October, November, depending on the region. We are more focused on the center west, Mato Grosso and Goiás in Brazil. So you have to have the first rains, and generally you're going to plant soybeans. And then after planting, you're going to spray the crop. And this is where we are going to sell uh, this time of the year, but also in the second quarter of the year. I'll explain why. And then towards the end of the year, we have the harvester, which is a very specific product, and that is going to sold this year because it's going to be used in January, February, and March when you are harvesting the soybeans. And you have 15, 20 days to harvest the crop. So you have to be well prepared. When this crop ends, we have the second crop. In our region, generally, you're going to have corn. So you're going to have other rains, then you're going to plant corn, and then you're going to use everything that you use, the planter, the sprayer, and the harvester. And that is the whole cycle of agriculture with the harvesting of the second crop in mid-year. And then the whole cycle starts again. So one product that sells all day long, another one in two seasonalities, and the others a bit more in one specific period of the year. All that said, this market had a substantial decline in the last 3 years. In 22, it was the year that we most sold agricultural equipment, almost 67,000 units. Then it declined, and now in 25, we are starting to resume the volume of machines and equipment, mostly because of the Southeast region with more valued commodities, coffee, sugarcane, citrus. When we look at the regions where we are, Goiás, Mato Grosso, Paraná, these were the regions that were most affected. Soybeans and corn crops are still down. They are not growing. They are stable now. In Mato Grosso and Paraná, we had no growth, and in Goiás, a very slight decline. So why I'm showing you that our region is still not growing, but it does have a need for fleet renewal. It's been 3 years now that the region is being affected, but renewal will come for farmers to expand areas, change products. So we understand that things are getting better. Commodities are more stable in prices. So farmers are a bit better in terms of the momentum they are going through. Today we have 34 Automob stores in Mato Grosso, Goiás, Mato Grosso do Sul, and also in Paraná. These are the most recent ones. Way back when we started in the business, we understood that we should have independent structures per brand. So we have Fended stores. This is in Sinop, Mato Grosso. This is a Walter's standard store. This is in Alta Floresta, Mato Grosso. And as soon as we acquired Paraná, we proposed to have a dual brand model to the OEMs, both brands together. And this is our store in Guarapuava, Paraná, which is a trend now. Now the 34 stores are in this format, and we are working to go from 3 to 7 stores in the dual brand format. This gives us more operational efficiency. Fendits are just high horsepowers. And then the customer can go into a store and buy a smaller tractor. So they're going to have everything in a single store. As we did with trucks that I showed you in the previous slides, 5 years ago, we started diversifying revenues. And we think that we do have an opportunity for that in the agricultural sector. And we are working for that because that improves margins, makes the revenues more recurring. So today in our stores, we have spray drones. That is very fashionable now, and other things, chainsaws, brush cutters, multifunctional equipment, agricultural implements. Today, we represent PTX Trimble, the best technology in precision agriculture today. And for that, we already have a smart agricultural hub. So all the tractors already have telemetry. We help the customer identify failures within our integrated solution center. Today, we already can monitor it all. Sometimes our customers is 5 kilometers away from the closest store. Mato Grosso is a very large state, but through our integrated solution center, we can start providing services to customers, and then when the mobile service gets there, they already have all the parts that are going to be needed to fix the tractor. Within agricultural segment, we have huge opportunities. Today, we have the right inventory level, a complete portfolio with complementary brands. We had the transformation and optimization of our structure, a huge opportunity to diversify revenue streams. We understand that the business is seasonal, and we know that agriculture has ups and downs and volatility, but we believe profitability comes across cycles. So we are very much prepared. We do believe that the fleet is going to be renewed next year. The crop is expected to be very good for 25, 26. So we think it's now the turnaround. And to close, our construction and mining equipment, a very thorough portfolio, both for construction or mining. Recognized brands, premium brands. Our main manufacturer is Komatsu. They have a plant in São Paulo, high quality Japanese product. They have excavators, tractors and others. They account for more 50% of our revenue. And then, I'm sorry, more than 94% of our revenue, but we have other brands. Bomac, that is a German company that works with pavements on highways. These are Bomac, and Manitou is a French brand that works with recto excavators and farming handlers. And this segment has a specific characteristic, which is highly diversified. It can be agribusiness, construction companies, pulp and paper, construction. So this is a line that we really believe is going to grow from now on. So this is our heavy business. We are present in strategic regions with high potential and economic diversity. We are very well positioned. We are in the best markets in trucks and equipment. We work in São Paulo, Rio de Janeiro, Porto Alegre, metropolitan regions. In the agribusiness, we are in the center of Brazil, regions with very large transportation companies. We have also huge opportunities with passenger shuttles. So we believe that we are ready for a new cycle in the heavy vehicles business. Thank you very much for your time. It was a pleasure to talk to you about our heavy vehicles business. Thank you.
Christian, thank you for the explanations. We will now have the presentation on synergies and capital structure. So let me invite the Chief Financial Officer, Emílio Carvalho. He has over 37 years of experience, being 11 of them as an executive in retail companies. Emílio, you're most welcome. Thank you, Fabiana. Good afternoon, everyone. It's a pleasure to be here with you today. And just like Sebastian, I've been here for just 5 months in the company, but it feels like forever. It feels like a long time already. My experience in retail is already very intense, and as you can see, this business is a very comprehensive, diversified company, and I'm in love with this business. So let me begin by talking a little about the capital structure and synergies. Let me go into the next slide. Oh, I got it. So, first, let me tell you some things that were already said. I might repeat a few things, but I think they are important. So, first of all, you remember that Sebastian mentioned that the Automob Group acquired a lot of companies up until 2023. In 2024, we had a restructure that brought in heavy vehicles into Automob, and then we listed the company. So with all of that, the Automob Group had 80 companies. I'm not talking about branches. We had 80 companies. And within those 80 companies, the Automob Group also inherits 9 different systems. They already mentioned, right, the RTs from all the different dealerships. So these new systems, the DMS systems, we had different systems, 4 different systems that we had to manage. And these 4 systems are not just 4 systems, actually. They had different versions and different setups from different companies. So just for the light vehicle segment, we had 9 different versions of the systems. I said 11, but it's also because we have others from the heavy vehicle segment. So we had 11 different systems with 80 different companies that we had to manage. Not only that, we also centralized our management in Mogi das Cruzes. So we put everyone from administrative segment in Mogi das Cruzes. I'm telling you step by step so that we are all in the same page. And so not only that, we brought everyone to Mogi das Cruzes and as they were. So if each company had accounts payable, accounts receivable, accounting, all these people went to Mogi das Cruzes. And so when they got to Mogi, we had 80 companies, 11 systems, and each company with their own people. So not only that, we had to think about how we were going to consolidate all these informations. There were no standards yet. All accounts payables, accounts receivable, they worked in different ways for each companies and they were not connected and linked with each other. So we had to adapt all that so they were all connected. There were juxtapositions of informations. So if we had the overlaps, right? So accounts payable for all companies. I don't need 20 accounts payable. I don't need 20 accounting people. So first of all, we had to do something that was obvious, and it was very interesting to work with that to really simplify all this organization. So consolidate and simplify and what we called, right, to tidying up the place, right, in the administrative sector. And that's when the company decided, as they assessed the situation, that we had very different procedures for each company. So we decided that first of all, we need to simplify our systems. So let's see the opportunities, let's consolidate everything, and now we need to simplify our our procedures. And what was the first thing that we thought that we needed to do? We needed to go over incorporations. We didn't have to have 80 different companies. So let's see how we can consolidate that and have fewer companies. Then, okay, let's say that is done. We are doing that. So let's take advantage of this movement and also standardize our systems. So then we were trying to unify the systems. And you can imagine the complexity, right, of this, working with different tax IDs and different back offices. So we were trying to work within this process, and we have our IT director, Alvo, that works very closely together with us in this. And so we've been trying to incorporate the companies, and within each incorporation, we are also trying to incorporate the systems. Within this process, we are reviewing our procedures, our systems, so that we can get to a more stable environment. Let me give you some statistics. I told you we had 80 companies. At the end of 2024, we ended with 76, so we already incorporated some of them. And then in November 25, we have 55 companies. So you can see the size of this reduction. And it was only possible through the hard work of our team, of our team, our legal team, our accounting team, all of them that are mostly in Mogi, really working hard to organize all that. So if we have 55 company, we already incorporated a lot of companies, right? And so our goal is to have 40 tax IDs or 40 companies. You may ask, why 40? Why not one? Why are you not aiming to get to one? This is a restriction that we have because the OEMs don't allow us to work within one tax ID with competitor brands. So, for example, I couldn't have one tax ID and work with both Ford and Fiat, and that works with several different brands. So we, did the math, and between used and new cars, lights and heavy vehicles, 40 companies is a reasonable number. And within this idea, thinking of simplifying, this is, I think, a very important word, simplifying everything. We want to get to just one single system, one VMS, one NBS. So we are choosing NBS as the system, and we are working to get to that. And I think this will be very important for the simplification. Everything will be unified, standardized. We will have more control and be able to work faster and simpler. Something else that we are working on is tax efficiency. Those of you that understand tax law, and you know that you can't compensate credits from different companies. You can offset credit from different companies. So let's say that I have a company that is in debt in tax, and then I have another company that has a tax credit. I cannot offset that among companies. So there were companies that they paid X tax and others that didn't. We understood that these incorporations showed us some benefits, the synergy that I'm talking about. So in 12 months from past November to this, we have 24 million reais in IR pay reduction. So just giving you some examples of what we can do and what we will do within this process. So again, there there was the situation was very complex in the amount of companies, in the amount of systems, and tax efficiency. But then we also have procedures, right? Each company work with a different procedure, and that's normal. They have their own cultures. And we also had to simplify that. So up until November, we already were able to map over 50 procedures from different areas, accounts payable, accounts receivable, accounting. So all these procedures, we haven't finished this yet, but we already see a lot of opportunity for improvements. And these opportunities are mapped, and we are already creating solutions for over 250 situations. And for these more than 250 processes, we already found automation and robotizations that can help our day-to-day activities. Just to give you an idea, we have more than 80 robots that were created just to help with the tax sector. And so as we move forward in these in unifying the systems, we can see inventory in a more efficient way. You can see billing in a more efficient way. Back in front office, we can make decision faster. We have information that are ready to go, and all operation and administrative synergies. Okay, let me go back to that slide. I missed it. I'm almost there. I'm almost there. It's not this one. Okay. So in this slide, thinking of all these actions that we already that have already been done, I can show you for the second quarter and third quarter 1 percentage point in savings. And this is because of all the opportunities that we were able to see. Obviously, you can see the synergy among the different teams that were consolidated in the administrative area, so that we had a lot of overlap, like I said, so we had to make some adjustments in our teams, and we already did that. We restructured the team. In contract as well, there were opportunities. Some companies had services that were in one side, and on the other side we didn't. So let me give you an example. In audits, for example, when I came to Automob, I already knew that there was a service in technology, linking data. One company did that and the other didn't. So we had to unify all that, both for back office and front office. If you think of different services that are offered, surveillance, for example, we saw that there were some that did it better than others, who had the best service providers. And we did that also thinking of the front office, thinking of vehicles transportation, all the centers and repair shops that we created. This was a very detailed work so that we can think about saving costs in freight. So where is the car going? Is it going straight into the dealership, or is it going to a center first? So we are reducing costs to really understand how to streamline the process, how to optimize technology, how can I have savings in my teams if they are transporting bus or airplanes. If I can purchase a ticket with 20 to 30 days beforehand, that will be best. Again, thinking of ways in which we can reduce costs. Now let me talk about capital structure. First, I want to highlight that from one quarter to the other, we reduce in 80% our liquid gross debt. The second point is that we have, if I look at net debt and EBITDA, we have 3.6 months. The paying inventory that usually is inventory for light used vehicles, we got to 1.7 ratio net debt EBITDA. Our average term is 2.7 years, and our average cost is 2.8% CDI. This covers our debt until cash covers gross debt until mid 2027. And then we have the floor plan. What is the floor plan? Is when the OEM think of purchasing vehicles, we have up until September 25, 950 million reais, and out of that, 700 million are still installments in grace period. So here, I also want to highlight that we have a limit in floor plan for our OEMs that is still not contracted. Oh, that is over this 950 million that I mentioned. Now, let me talk about another value driver that is very important that is related to working capital. The first highlight that I want to give you is the reduction in working capital from second to third quarter 2025. So it's a reduction of 9 days. If I compare with the first quarter of 25, you can see that this reduction is even more important. So this is an area that we are really working hard on. And how is this reduction working? It's coming from our inventory. If you look at the green line, the paid inventory, you will see that we have a reduction from the second to the third quarter of 16%. It's 200 million reais, a 17% reduction. Before going into the fourth quarter 24 to 25, we had 400 million reais in reduction, which is 28% of our paid inventory. This is a lot of money, and this is a very important focus that we are having here in the company. This is not a reduction that we are seeing one segment or the other, is in both light and heavy vehicles. So this again proves how much the company is dedicating for this. Also important to highlight is in the third quarter of 25, although we already saw a very positive evolution, we still see that we have exceeding inventory in agribusiness equipment that is 200 million reais. So we are still thinking how we can get a better working capital and work with these drivers. I'm going to close my presentation. I once again want to thank everyone for being here, for the opportunity to talk. Thank you very much.
Thanks, Emilio, for all the information. Now we are going to complete, we have completed our value drivers, and now we are going to talk about our strategic pillars to increase profitability. And with that, I invite to the floor Sebastian Loss. Back to the floor. We are getting to the end of our presentation, to the best part of it. First, again, I would like to congratulate the team. Uh, the presentations were very clear. It was a very nice update that I hope have met the expectations of those three questions you had. We did our best to try and explain what our business is all about. So I think that it got clearer as each executive talked, uh, all of them that are so experienced, lots of years of knowledge accumulated to talk about each one of the value drivers. I don't know if it's because I'm Argentinian, but this clicker really does not work with me. I think I'm being boycotted here because next year we have the World Cup back again. Anyway, I think it was very clear as we heard each one of the executives talking about the value drivers that we already have good practices in place. We have the performance, we have high potential in our portfolio, but we still have a lot of room to grow. And we have been doing our homework. That is trying to study each one of the value drivers and understand our performance today and where we want to get in the future. So that's why we are presenting to you our guidance 2027. In addition to numbers, what I wanted to say is that this guidance was built based on what you heard throughout the day. We are convinced that uh, regardless of the external contents that can even accelerate this guidance, we have a lot of internal work to do. You heard Soldi say we already have a percentage of our stores with a one-to-one ratio, new to used cars. So this is not a number that is, just out of reality. We do have consistency. And we have evidence behind. In F&I, as actor mentioned, we do believe, after sales service for EVs. I think this is a trend, and our scale enables us to train our people. We have several training courses for specifically this trend because again our average price of EVs and hybrid vehicles as well as combustion cars do generate a relevant amount per car in terms of profitability. Uh, it, and again, we are talking about numbers that are much higher than the margin that you have just by selling the cars. And Christian talked about our strategy with agricultural equipment. This is a strategic complementary business in the group. And, out of this individual analysis of each one of the value drivers, we can get to net revenues up to 27 of 16.3 billion reais, a growth of 29%, and EBITDA of 980 million, growth of 83% compared to what we have today. So we already announced to the market, but we believe that based on what was presented to you, you are going to have more information to develop your own models. Again, very briefly, and just to close my presentation, I would like to go through our pillars just for you to know clearly why Automob is a market leader, but also for you to understand our potential. We have the people. I think it's very clear the expertise of our executives, our managers. We have high quality governance. We have a diversification of portfolio. And perhaps today you understood better why we have such diversity. The infrastructure is ready with all the capex invested in recent years. The dealerships are standardized, are ready with a huge potential to increase sales per stores. A large range of services in the agribusiness focus to restore profitability, Emilio explains the improvements and what we expect from back office by simplifying systems. I think it's very clear to you all the potential of to be captured and a capital structure that is going to be focus and discipline for the future. So, with that, I close my presentation. Thank you very much. And I hope we have met your expectations. And now we are going to open for your questions. Wait, let's invite Lucy to the stage. Please, Sebastian, stays here. We are going to have the chair of the board of directors of APIMEC for the bronze seal for Automob's first Investors Day. Lucy, please, if you can come. So there you go. Good afternoon, everyone. Analysts, other investors. It is our pleasure. APIMEC Brazil is one of the oldest agencies in the capitals market, 65 years old now. And we would like then to give you the seal that marks your first Investors Day. We are sure you're going to have a long life as the other companies in the group. Thank you so much. Thank you so much on behalf of our teams, both from Automob and Simpar. Thanks to our colleagues that are attending the meeting. Don't forget to fill out the assessment form for us to know your opinion about the quality of this meeting. I'm going to give them the assessment form after the Q&A session, okay? Thank you very much, and congratulations to the officers and managers of the company. Thank you. Very well, then. So, moving on. Right now, we are going to invite to the floor the chairman of the board of directors of Automob and CEO of Simpar, Fernando Antônio Simões. Most welcome, Mr. Simões. Let's give him a hand. Well, everyone, good afternoon, everyone. As always, I came here just to talk a little because you heard the ones that really work. They are the ones that really make a difference in the business. And I think that to be more objective, for us not to lose pace and for me not to jeopardize the event, let's go to the Q&A and then I'll come back. I think, perhaps, we put things forward. I think it's going to be best for us to have the Q&A and then I'll come back. I'm sorry, I think this is going to work better. And then, it's them that make it happen. They are at ahead the business, and it's going to be nice to talk about the board of directors view, but I think it's going to be best after the Q&A, okay? For you not to lose the pace of the presentation. Okay, so let's go to the Q&A.
Okay, so let me explain how it's going to work. We have 30 minutes for this Q&A. The Automob executive that made the presentations will be back on stage. Please come up. And whoever is here in the audience will get the mic and will be able to ask the question directly. I ask you to please be objective in your questions so everyone can ask their questions and we can take advantage of this time. So ideally, say your name, the institution that you're representing here, and then we will know who will answer your question. Those of you who are online, you can always send in your questions through the questions button, and we will also answer these questions here. Everyone ready? Okay, let me give you another microphone. So let's see who has a question. You go ahead. You in green. Can you get the microphone to them? Just raise your hand. Hello, everyone. Good afternoon. Gabriel Rezende from Itaú BBA. Very quickly, you showed the pie chart showing the importance of Chinese OEMs on new vehicles. I just wanted to understand how do you see these percentages increasing in the next few years, and how we can think of rentability in these sales compared to traditional dealerships. Do you see any difference strategy for these OEMs? Gabriel, you said, right? Yes. Gabriel, thank you for your question. This is truly part of the group strategy to work with these new entrants. Like I showed in my slide, the Chinese brands that came to Brazil, they chose Automob. And today we have 5 brands that are the main Chinese brands, and we are representing them. In that slide, I showed a share that is even higher than the market. Market is working at 9%, but still evolving. So I can't really say what will be the share percentage, but I do believe that it will be very soon close to 20%. They are bringing you new technology, innovative products, and I do think that traditional OEMs will have to adjust to that. So I don't think it's going to be as easy to gain market share in that segment. Automob is present with those brands, and we are at a higher percentage than the market. Something that you said that was interesting was the rentability. When Heitor said that the Chinese brands have shown a higher average ticket, a higher price in parts, rentability also work at a higher average price. The Chinese brands in the group is over 200 million reais. So this is also higher than the average of the market. So I think that also brings rentability. You in blue? Hello, everyone. Good afternoon. I'm from Bradesco BBI. Just talk a little bit louder if you can. André Ferreira from Bradesco BBI. From our perspective, it seems that there is a lot of value in drivers thinking of the neutral used car ratio. So, in your guidance, I wanted to understand when you think about expanding stores and footprint. Thank you for this question. Our guidance is not talking about an aggressive organic growth. We still see a lot of sales opportunity, sale points opportunity, especially in used cars. In the past few quarters, we see a growth in used cars that is higher than new cars. So we do see a potential for an organic growth. Next question, you in the blue sweater. Thank you. Good afternoon. I'm Alberto Valeri from BBS. I have 2 questions. First, thinking of the opportunity in Chinese brands, what do you see in pricing? Do you think their prices are more attractive? There are a lot of new cars in GWM, BYD. So how do you see this pricing, if that impacts other vehicles? And I also wanted to know of your guidance, what do you see of interest rates in the country? Okay. So for the first question, I'm going to answer. Of course, Chinese brands are here to stay. They even have new plants. Our brands already have plants in Brazil that are manufacturing vehicles in important states as Salvador, São Paulo GWM is here. So we see a lot of opportunity. And other brands seem to also want to have their plants in Brazil. So this gives a more safety for the consumer. And then when talking about price, the Chinese cars are changing the market. Let's be honest, shaking up the market. But then when you think of traditional OEMs, they are making movements and they are prepared to be competitors with these Chinese brands here in Brazil. Fiat and other brands, traditional brands, they are prepared. Volkswagen has already announced, you saw the amount that they are investing in that. So they are prepared to compete with the Chinese and with electrified vehicles. Electric EV are hybrid or electric cars, even buses as well. So I do believe that the Chinese brands coming to Brazil are accelerating the process in traditional brands, and we are already seeing the signs of that. And then the second question, I'm going to let Sebastian answer. Thank you. To talk about interest rates that we are putting in our guidance for 2026, it's 13.7%, and for 27, it's 12.37% with PDI for the market. Next question in the back there. Good afternoon, everywhere. Congratulations for this presentation. We were able to really see the discipline that you have. My question is very objective, is talking about EBITDA debt. Looking at the 2027 guidance, is there any driver for leveraging this driver? What I can tell you is that the trend is in deleveraging, both because of better results. We have different drivers that we said throughout the presentation, but also managing inventories. We were able to reduce 400 million reais in the past months, in the past 4 to 8 months. So within what I can tell you, our focus is in deleveraging. And so I can't really say numbers, but this is our focus. Any other questions on the floor? Elo. Good afternoon. I'm Elisa Cruz from Stauxes. Congratulations for the presentation and for the first Investor Day. My question is, what would make you change the rhythm of opening new stores or the pace of opening new stores? If you reject an opportunity, I wanted to understand, how do you look at this and what kind of opportunities do you accept or do you reject? And how do you see the market? How hot is this market in the dealership business? Well, first, thank you. Thank you very much. And thank you for the feedback. So thinking of M&A, this is a topic that is very important for Simpar Group and for us at Automob. Everything that we saw today is organic growth, our current resources of the company and our funds. Thinking of our drivers and new sales points, I think the first thing is that it has to make sense to our strategy in geography. It's very clear to us that we have different geographic um, areas in which we are prioritizing. And that doesn't mean that if we get a new good proposal, we are not going to evaluate or assess it. But then the second point that I want to highlight is brands, important brands that have long-term plans. Today, we are working with brands that represent 80% of sales in Brazil. So we are working with all bids. So I think that those are the two main ideas that we had to focus on when thinking of new stores. But then when we look at our guidance, our focus is growing each point of sale because we do believe that we have a lot of opportunity of growth here. Okay, now I'm going to get the online questions. There's a new one. Natalie Mergiso is an individual investor. How do you see electrified fleet in Brazil thinking of recharging? Thank you for the question. It is really a challenge. We know the infrastructure for charging systems, and we are seeing a new demand for that. And we see that this is a need for our customer. I mentioned that we have both electric and electrified vehicles. Like I said, the solution in Brazil is to focus on hybrids because the hybrid will give autonomy in Brazil that we have. It's a very large country, so it's very important that the customer has this possibility. But that doesn't mean that this natural growth that will happen through the OEMs and gas stations that are already present in our day to day. This will grow as well naturally. The needs will make it so that they will need to, even the government will need to improve these systems. It's very common now for you to take a road trip and find different places that have um, areas in which you can charge your car. So we do understand that maybe it's not going to be at the same speed as we are seeing EV in the market, but we will see growth. And the important thing is that the brands that know about this problem need to think of solutions for EVs. So the brand is not only coming to sell an electric car, they are coming to think of hybrids. And this will be very important, and is what's happening with the Chinese brands here in Brazil. Very good. We have another question. I am Thais Betim from Caixa Econômica. My question in capital structure, you talked about higher turnover in inventory, and I wanted to know if you still have opportunities to improve that, and what is the partnership with the OEMs to improve managing your inventories? Thank you. Thank you for your question. Yes, we see a lot of opportunity to reduce inventories. It's 200 million reais that we have in agriculture equipment storage, and this is an ongoing work. There is still opportunity both for reduction of our inventory. It's not just reduction of inventory, but it's also managing these inventories. Both for light and heavy vehicles, that we see a lot of opportunity. And the OEMs, yes, they are our partners. They are the ones that will work with us in management these inventories. So we find ways to motivate our OEMs to have the proper inventory without having to allocate money straight into that. So, well, to to answer your question, yes, we see opportunities, especially in agricultural equipment and reducing inventory both for light and heavy vehicles, but also improving our management. Hello? Rodrigo Fonseca from Galapagos. When you say the value drivers, it's very nice to see how you are positioning in the markets compared to your competitors. But today, you're not able to deliver for anyone. So you have a lot of value. But when we talk about EBITDA, we are not seeing profit, right? Even your growth, you're growing over the market. It seems like it's all doing very well. But if you look of your capex, so my question is, looking at the current scenario, and if you think of impairing, that doesn't count. But where we are thinking of a reasonable profit, I think you're going to work on AVA. That's how I see it. What do you do with drivers that you can't really control, for example, in agriculture equipment? And how much it has to do with the legacy that you have in this company, with the paid inventory, and how much it has to do with management, acquiring so many companies and really delivering excellency in managing all these companies? Do you think that the people that you're putting up, are they adequate? Are they adequate both in specialized services or in the area in which they are located? I know that there are a lot of challenges, but I wanted to talk about where we are today and where we want to get in rentability, in profitability. What is your diagnosis when thinking of this gap that we have today? Great
Good
question.
question. I'm going to start by answering that in the third quarter, the company being very transparent to investors did break down net profit by segment for the first time to make it clear where opportunities were. 91% of our revenue comes with positive profit in the third quarter, although we do have to capture all those value drivers and with very high interest rates. But within our capital structure, we believe that we have opportunities. So 9%, 90% of the business has positive profit and opportunities to expand profit even higher because of the agricultural equipment cycle. And we can talk about that a lot, but we know that we have cycles in the business. But we do believe because of the nature of the country, because of the opportunities that we have, uh, even if you think of Brazil geopolitically, we know that the agribusiness is going to have a positive cycle. So we believe it is a complementary business. We think it's strategic. And I think that if we do our homework well, and because we did the impairment right, I think that our assets are more competitive now. And that uh, enables us to sell our older inventory even more. With regards to the past of the company, I think that everything that was done was fantastic. The company grew at a time that there was no leader in a very fragmented market, and we have huge opportunities to increase and accelerate growth. Perhaps if we had a lower interest rates, we wouldn't be able to acquire the quality companies that we did. But this is more than an answer. It's just, an item for discussion. But to be straightforward, we are addressing the problem with agriculture equipment. We are going to continue accelerate sales there, but it is a business that we do believe for the future. We have room for one more question. Good afternoon. I'm Gustavo, individual investors. I saw that the management of cash conversion, you are reducing the number of days. What is your guidance in terms of where do you want to get? How much you're going to reduce? What's the mix between the sale of vehicles and S&I? Thanks for the questions. We do not give guidance on this point because uh, we cannot give more detail because that was the information that we shared with the market. But we are working to give you as much transparency as possible. We have our strategy of having more sales per store. With that, we are going to have a higher turnover. The idea is to have the right side of inventory in each store. So the idea is to have more sales per store. And with that, we are going to decrease our inventory days. You have been following our cash cycle. It has been reducing substantially in the third quarter. This was one of our focus. And the reduction was very clear. We have the discipline for the future, but unfortunately, we cannot give you any specific guidance on that. But we do believe we still have room for further reduction. And to complement the previous question, today Automob is still under construction. If you see the real value drivers of the company to really drive profitability, I think that it was very clear the technical structure, the corporate structure that we have today, and how we can capture synergies. It was very hard that the company grew very aggressively. 20-fold in the last 5 years, lots of acquisitions. So, putting together all the systems, capturing synergies, simplifying the structure, this is going to be finalized in the first quarter of 26. And then we are going to have concrete impact from synergies, gains, optimization of processes, and etc. And we are going to start having more AI, more machine learning. So we have an avenue of improvements to be implemented for the agility of information, simplified processes that will also simplify the way we operate today. So we are very confident that once we complete the construction of the company, we have giant opportunities. And despite all that, in the third quarter, 90% of the business was profit positive. Very good. The 30 minutes flew. We are closing the Q&A session. I thank you very much for attending. I thank you for your questions. Thank you for those that were following us online. And now I'm inviting Fernando Simões to the stage to address us and give us the view of the board of directors of the company. Thank you very much. Fernando Antônio Simões, Chair of the Board of Directors of Automob, CEO of Simpar, and he's going to talk a bit about the views of the Board of Directors. Thank you very much. Well, before we start, thank you for attending. Thanks for your time. Those that are here in person, online, it's always very good to have our people talking to you what they live in practice, what they have been doing. It's a huge pleasure. So I thank you very much for attending. I have some bullets. It's not something that we uh, decided before. We just wanted, to talk about the business, different points of view of those that make it happen. So I'll try to share my view on the business as Simpar, but also as the chair of the board of directors and as a shareholder. As some of you know me, I'm not really a good speaker. I don't have fantastic presentations, but I will try and share some ideas with you. My father started the company 70 years ago. He was a truck driver. He provided services, and he came from where he came. So he understood the importance of a customer. And the market followed us with a transportation company, then logistics. Uh, JSL went public in 2010. So it's very important for you to understand our business. Our logistics business, quite humbly, everything that I've been telling you for 15 years is the same. We still have a lot to improve. I try to do better every day. We have to learn and do better and continue to develop. However, quite humbly, I want to share with you what we did in 15 years. We were the only transportation logistics company that diversified, created businesses that contributed to customer loyalty in our business in a DNA, not to provide services, but really to serve, to be together with the customers, creating businesses. Then we started to grow businesses within this transportation company. And today we have the largest logistics portfolio through services, not prices, not following trends. Because sometimes, people that work with prices for logistics just went bankrupt. And those that follow trends, sometimes just lost uh, importance. We listed JSL. Everybody wanted us to go through e-commerce. And now we see a lot of things happening. And we see it's not that. I visited some companies abroad, large companies that you're following that are very much connected to the last mile are having difficulties because e-commerce is going straight to the last mile. And we are in logistics working with the plants from distribution centers to the DCs, but not forward. So we are working with our customers and clients with a DNA to serve. We have had the dealership business since 95, the truck business since 2007, and we have been in the agricultural business since 2015 and 2017 a bit stronger. So this is our history. What we have been doing, what we have built. To make a parallel and give you an example very quickly, and our focus is that our greatest difference is the people you saw today. Our people, we are organized, we work every day, but corporately speaking, regardless of religion, first comes God, then our clients and customers, and then our people. These are the ones that put together customers and business. Without people, we don't do anything. And these people are aligned with our values and cultures. I can't tell them if they are right or wrong. We have compliance. We believe in values, culture that translate into a management model. And our management model is made by people. I'm not going to tell you that other companies do not have good people. They probably do. But quite humbly, again, and I'm speaking here on behalf of Automob and all our other businesses, no one has so many good people as we do. And these are the people that make the difference. To get to Automob, I would like to share with you something that just started a while ago. Movida. We started in 2014, 23 stores, 2,600 cars. And lots of people said, "What are you going to do in the rental car business?" It seems that it was boogeyman. So they didn't understand that it was a service. At the time, we only have white and silver cars, affordable cars, nothing else. People wanted to have a nice car. When I went to the States the first time, I was 24 years old, and I wanted to rent a car that I didn't have. I didn't want an affordable car. We bought Hyundai. People said we wouldn't sell. We bought other brands. And why? Because we provide good services, a nice store, a counter that was nice for you to be closer to your customer, that they could pick up cars faster, return faster, a nicer store, a place for the children to be there. Because when children are okay, the parents are okay. And this business today, you see, Movida, we have, a number for the customer to be served. But when they have this number, we have a center to monitor what's happened. When they start to sign the contract, we have monitoring. This is service. And so I'm being paid to provide good services. Customers have to come back. They have to have word of mouth and being more customers. That's how we set apart from the competition. And now, talking specifically about Automob, we are talking about a group of dealerships. We have been working with dealerships since 95. We had a small expansion between 2000 2005 at the time of crisis. We had two or three brands. And then when we had the uh, IPO of JSL, we wanted to do more. Dennis is the VP in finance. He's been with us for 18 years. He made a huge difference in our growth. And in 2013, 14, Dennis and I wanted to do something, but then we had Movida and so much more. And, our plan, sometimes people from the outside don't see that, but we have very concrete plans, focus. And we decided from 2015 to today to focus on our restructuring. In this period, someone said, well, uh, someone that wanted to buy us, and I said, no, I don't want to sell. If we don't do, someone will do. So we developed other business, but in the last 2 3 years we finally decided to consolidate our dealership business. What do we see in the dealership business? The market is fragmented. We are not going to replace dealerships in the market. Uh, the OEMs are only going to get to retail by dealers. The dealers have to exist. When you see the dealership business is extremely fragmented and they don't offer other services like used vehicle sales. You saw this. And it's so very incipient. Dealerships don't usually work with used vehicles. They don't have the history. Many dealers do not have a showroom that is prepared to sell. That's incredible, to focus on volume. And I say, you're paying for the lease, for the electricity. And, some dealers work less than 8 hours a day. And we are part of that. We have to improve that. You call, I don't know, to repair a car. They're going to tell you when you're going to pick up, when you're going to return. I don't know. If it's just a tune up, I don't know. You can deliver the car at night and I'll give it back in the morning. I will work nights or we work within 3 4 hours. But you also have to have a nice environment for the customer to be there. It sounds like details, but it's not. Say, how are you going to do that? You're seeing a group of dealerships that have some things to be adjusted. The agricultural equipment, you did ask about that, but it is going to be settled. And why? Not because we are going to invent customers that are going to buy our equipment, but the agribusiness is going through a crisis that no one saw before. People are delaying their purchases, but how much can they delay? 1 year? 2 years? No, but 2 years. And now, uh, perhaps another year, but it will come a time they will have to buy. Otherwise, the machinery is not producing as suit. They have to buy. And our inventory is not perishable. We had prices that went up, then we had repossessions, we had machinery that were already on ship, prices went down, but things are not going to stay like this. And these equipment is going to be sold. And for you to see the numbers you see today, there was so much renovation, so many things going on. And why? Because of our DNA that really sets us apart. Eusébio Matoso Avenue, there is a Honda store that was just completed. We had a small showroom area on Eusébio Matoso's. Then you had a repair shop and a body and paint shop on the first floor. 3 kilometers apart in Morumbi, we had another Honda store from a group that we bought with body and paint shops and everything else. What did we do? The repair shop that we had on the ground went to the first floor. The rest, the paint and body shops went to Morumbi, and we have a bigger showroom. With that, we are selling 150% more than what was sold. The same store, the same space, but it was just renovated. Even while we were renovating, we are selling more. And you are here today. AutoStore is a reference in luxury brands. The showroom was going to up to here. Where's Robert? I was joking with Robert and I said, "What was this?" It was a storage room where we were. With, they would sell 28, 30 used cars a month. Now they are selling 60 to 70. They have 80 to 90 cars in inventory. So I'm giving you practical examples because this shows where we're heading. And this store is an example. The glass that you see here was up to there, where you see there. From here, you didn't have anything. On the first floor, you have the repair center. We work later. We are working Saturdays as well, right? You didn't open on Saturdays. So I buy a car that is 500,000 and the dealers do not work on a Saturday. If I have a customer and I'm not going to sell a used vehicle because if I don't have a used vehicle business, I don't accept trade-ins. If I accept trade-ins, I sell more new cars. I know there's a lot to be improved. So I'm going to give you an example. You buy a used car, and when you sell the car, we tell the customer, I'm going to give you the car in 15 days, perhaps 5 or 6, but we can improve the processes. We are going to deliver the car to customers in 2 days' time. You cannot take 5 to 6 days. It's a problem. The car stays in inventory for longer. You have better turnover if you're faster. So these are the kinds of levers of drivers that are going to improve our sales. I'll give you an example. You go through a dealer of ours, people, leave their cars, then they have to pick up an Uber and then come back. Of course, you cannot take the customer home, but inside our dealer shop, perhaps you can have a car to rent. So you're going to leave your car to be repaired. Then you can choose, you pay a daily rate, and you have a rented car that is better than what they have, which gives them, the willingness to have a better car to buy. These are minor things that seem simple. That space over there looks simple, but see, you are not only considering the customer. If they come with children, you have to have a kids room because then the parents are going to be more comfortable to walk around the dealership. You are changing people's cultures aligned with our values and culture. For you to transform the business, you have to transform the mindset of people. And this is what we have been doing in the dealer business. And the opportunities are giant to improve what we are doing. And now, with the right infrastructure, with the right processes and systems, really transform productivity per store. I heard a comment talking about new stores and everything. We are not in a hurry. Our business is strategic to consolidate in regions or brands that you have a large share. This is the business. Without creating guidance, I don't want to say more. There is another Automob inside Automob as you increase sales per store, as you start transforming. So this is what I want to share with you. M&A opportunities, well, we always have opportunities. There are lots of people who are tired and not many people are willing. And the car business, all the transformation, brands, new entrants, Chinese, other brands, I quite modestly say within our strategy, there is nothing to compare to Automob because of the regions where we are, consolidation in São Luís do Maranhão, São Paulo, Vale do Paraíba, we can dilute costs in logistics, distribution. You have Paraná, Santa Catarina, consolidated brands. The Chinese brought more competitiveness and improvements to the segment. Competition is part of the business. When the Chinese lower prices, the market lower prices. This is more opportunities to sell. It's even good for traditional brands because they are bringing more customers, customers that they did not have before. So just a little to you extra revenues to come. Sometimes we don't see them it in the business. We are selling about 150, 170 armoring services a month. We buy 180, but we buy more armored vehicles in addition to our armoring center. So we have purchasing power. Sometimes you have a margin in armoring more than in the sales of the car because of volumes, because of the regions where you are inserted. You have the heavy trucks that are fantastic when you're talking about used vehicle sales. Some people just want cars by subscription. We can have some kind of business with Movida. OEMs are working with that with the banks. Others do not want to have a car by subscription. They don't want to have the headache. They want to have their own cars. We are going to have a price that you pay a month, almost like a health insurance, and you have maintenance 100% included. It's part of the price. We know in our DNA what's the cost of maintenance of a car that runs X kilometers a month. So, value drivers, the appraisal desk for used vehicles. I'm going to ask you a question. In the appraisal desk, you have 10,000 cars. I'm telling you as shareholders. So 10,000 cars, then you are going to think of 3,500 for trading. How about the other 6,500? We are not working to go after this car. We have to buy and sell somehow. If it's not a trade in, I can buy. We have to improve that. This is opportunity. But more than that, we have been challenging people and we see opportunities. You get a construction company that is building a building, Minha Casa Minha Via program. You can have a partnership with construction companies for us to appraise the cars of buyers that come to buy the apartment. And this is part of the down payment that they are going to pay. It's a huge market. The market for used vehicles is 4 times bigger than the market for new vehicles. When you talk about used trucks, people think that this is a bad word. You only sell new trucks. No, it's a huge opportunities. So we are not saying that we created a miracle business, that it's going to transform for tomorrow. It's going to be in 26, in 27, 28, 29, 30. Opportunities for M&A? Many. But we have to take our time. Integration, quite humbly. If we integrate logistic companies, we integrate any business. This is not something that people are just going to move around. You don't have 18,000 employees. You're talking about small, confined spaces. We don't buy bad businesses. We have businesses that come with the people that believe in the new business. So integration is a responsible process. You're not just, micing meat and throwing people away. We are just working in what we believe so that we can continue growing very respectfully and adjusting processes. So we are very confident of our post MMA extracting value and not just trying to dilute costs at any cost. I think that growth will make our SG&A go down by improving margins. This is how we see the business. Future M&As are going to be good and consistent. The deliveries will come, the valuation of our company is going to come and increase. And with that, M&As are even going to be more appealing. I'm sorry I talked too much. My time is up. I'm not even going to read my bullets, but in short, there are huge opportunities. I'm very happy and I'm really convinced that now we have the infrastructure, it's time to extract value, improve processes, and have a very, very nice phase, a new Automob for 27, but improvements quarter after quarter. And, better turnover, lower inventory levels, everything different. Sorry, if you want to open for two, three questions, I can answer. I know I took too much time, but if anyone has a question, I'm here. Do we have questions to Mr. Simões? Anything that I missed? Sebastian, if you want to add anything to what I said. Elo has a question. Go ahead. Hi, Fernando. Thank you. Your words are always the peak of the presentation. It's very good to see how you see the business. Now, thinking of the history of Automob and where you're heading, conceptually speaking, Automob at some point will become a stronger cash generator because you're working with the working capital. Whatever you sell, you either get paid by the customer or by the bank. When the company is fully organized, and we are talking about mid next year, are we going to see a new cycle of M&As? What's the market like for mergers and acquisitions in the sector? In a world that demands more technology, if you're alone, you don't operate so well. So tell me a bit about the competitive environment and how do you see the big dream for Automob in 5 to 10 years' time? When? I'm a bit messy when I talk, but I speak out of my heart because I really think the business has opportunities. When you think of what the business can be like, well, today we have many things that were generated. I'm not here to complain about what happened. Cash generation. When we put an end to the agricultural equipment inventory, and I think this is going to be throughout the year with responsible sales, you're going to have a substantial cash in company. Now, remember that whenever you provide services that are really quality services to customer, you have more than customer loyalty. If you deliver cars in 2 days' time, your working capital is much faster in terms of turnover. So you decrease working capital. So we still have a lot to enhance. We have some cars inventory of 5, 7%, more than 90 days. We cannot have that inside the company. So these are the adjustments that will come with the process that we are going through. With that, our working capital is going to be much faster. The margins are going to be better because when you don't sell a car up to 90 days, it should be up to 60 days. It's not just the financial cost. You have a drop in the price of the car that can be point 0.5, point 0.3, but there is a drop. So here are other drivers to improve our results, including F&I. You are improving because you are offering more scale to the banks, and therefore you have benefits from that. So cash generation comes from this. But then you have the other side. Some people do not want to use cars. They think it's a problem to negotiate with banks. Oh, it's a problem that the Chinese are coming, the Germans are coming. Some people think there are problems everywhere. And you also have the succession of companies. We are going to have a consolidation in the Brazilian market as it happened in other markets. So without creating expectations, there are huge opportunities for M&A. We, as Simpar, continue to look into the market without creating expectations. There are opportunities now. There will be more opportunities in the future. So the market has potential, but how big? Think about what we have abroad. What happened with the consolidation of the United States? Synergies, the driver that we have operating in Brazil throughout the country, opportunities for transformation of the market. I think we can grow a lot organically, inorganically, very responsibly, being conservative, improving and bringing more margins to the business. I don't know if I answered the question, but this is what I see as a chairman and shareholder. And this is Alberto Valério from UBS. Think of Simpar as a whole. We have several companies operating different segments going through a bit more challenging macroeconomic scenario with a slightly higher interest rate. Automob has leverage above 3.5, Movida a bit above 3, Vamos as well a bit above 3. And now it seems that there is a window of opportunity for emerging markets, foreign capital coming to Brazil. Are you thinking of any kind of offer to deleverage the company? Because we see a growth in EBITDA, but profits a bit unstable. So, what's your mindset in terms of divestments for the next 6 months where we're still having a high interest rate? I don't know for how long interest rates are high, and I don't control the country. I don't know how long this will last. I started working when I was 14. I'm 58. Things were never different. And uh, uh, the last 5 years, there is always something happening up and down. In 2009, this happened. We went public in 2010. In 2015, we had the crisis. You saw what happened in 2020 with COVID, and you saw the actions we took in all these different moments. So leverage is not a concern. We pay attention to it, but it's not a concern. You see here that this seems to be Automob leverage, but see the amount of paid inventory. When you take a look at retail, with all due respect, some people do not have inventory, they don't have a distribution center, and they sell just with payments at site. This is not us. We know our assets. And within our plans set by the board of directors, we are going to leverage organically by increasing margins and with hard work. And if you see what we did before, we couldn't have done that without financing, without investors' money. And this is what we see for the future. It's like interest rates. I don't control. It will depend on the window, the investor, the time. So we never look into the next 6 months. We look into the next 70 years. So we are really certain of the quality of our business. And just to close, we are not in any business that is not resilient. Perhaps the customer is not going to choose us, but they will have to choose someone that does what we do because customers cannot live without the services we offer. So if they don't buy from us, they'll buy from someone else. So we are always paying attention to opportunities. You saw the divestment of one of our uh, investments. We had the never movement with related parties that the minority shareholders did not decide. And when you think of the Sickles business that came from the family and went to Simpar and the divestment, you see the margin, the return profitability, what call it, from what happened. So we don't know what's going to happen. And there are people that are a lot better than I. I didn't go to school, that are, people that are much more knowledgeable. And we do not divest because we have to. We divest when the right opportunity comes. If we believe it is the right thing to do, that will create value, we'll do that. But we are very confident about everything they're doing. And just to remember, 2015, we had a leverage of 5.2 net debt to EBITDA. Uh, it is what happened in Brazil. It is what it was. COVID came. People started saying, oh, you're buying the wrong cars. Movida is there. 1.8 million new clients because we bought the right car. So that's all part of the plan. And the idea is to have the right movements for us to have better capital structure, but continue developing. Thank you. One more quick question before we close, Fernando. Just going back to Automob. Today, car sales in Brazil is basically in person. Outside, abroad, we see lots of online sales or hybrid sales. Do you see this as a value driver for Brazil? Well, it is the last, so I'm going to share your mic because mine didn't work. Yes, I think so. You're going to have EVs, gas-driven cars, hybrid cars. Is that your question? No, online sales. Oh, yes, undoubtedly. Online sales, or at least choosing the car you want digitally. This is already a reality in Brazil. So when the customer comes, sometimes they know more about the car than you because they saw everything. It's very rare that a customer comes to store, they don't know what to buy. When you have two, three brands, it helps. But I do believe that choices are already online. it, it may change when they go to the dealerships. So online sales are going to increase, but I think that in Brazil, the processes end at the store. Why? Because you have the trade in, because customers want to come and sit and feel the car. But for those that know what they want to buy, they are going to use online services. And again, quite modestly, when we talk about that, today in São Paulo, we sell 28 to 30% of the Volkswagen cars that are sold in São Paulo. So we have huge share, a huge scope of brands, and digitalization will certainly help to that. Perhaps online sales are going to reach 10, 12%, but I think that, the final business will always happen at the stores. Thank you so much, and I'm sorry for taking too much of your time. Thanks for the work, dedication, everything you have been doing. Thanks for monitoring and following us. Thanks for your time. Sorry I took too much. Fernando, once again, it's always nice to hear you. How did you like the event? It was great. We are closing our first Automob Day. Thank you so much for coming on behalf of Sebastian, all the Automob directors. Thanks for coming. Thanks for those that are online with us. Thanks, Fernando. And for those who are here, don't forget to fill on the form so that we can always have good events for.
At the end of the event, we will get those forms. Everyone who is online, thank you for participating. And we are going to wrap up with a very special video. Automob, a brand name that grew and evolved. We are going further. We are building a complete ecosystem with mobility solutions. But it's not just about size, it's about trustability that we deliver in every service, in for every customer, in every detail, because everything starts with our customer. The customer inspires us, challenges, and transforms us. We innovate for the customers. We are innovating and overcoming challenges every day. We are cars, we are trucks, we are motorcycles, we are equipment, and we are machinery. We are light and heavy vehicles. We are mobility. We are our people. Automob. Mobility that transform lives. Connections that inspire trust.